What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a fantastic week, fantastic day, TGIF, as Tom would always say. If you're watching us on YouTube, welcome. Please consider liking the stream. We're going to talk a lot today about Tesla again, because some more developments happened. Qubit, because they posted abysmal earnings, and I think that retail is still coping a little bit with that and adding more money into it without really knowing the value of the contracts that they have. So I started interacting on Twitter again. I had to get off that app. That app is just, I'm sure if you wrote Dante's Inferno today, that would be up, definitely upper rings, you know, but definitely a part of it. Horrible application. But you had such, you know, hairy earnings here, and the retail guys on Twitter love Qubit. And what I was seeing a lot of the fans, these are from big accounts, you know, that get tons of engagement, okay? Just what they're arguing is the runway for Qubit is just not actually real, you know? And I think that retail floats a lot of this stuff. I mean, for instance, most of what you're seeing with Tesla on this run up here is retail, which tells me that we're not even at a bottom yet in Tesla, right? Because until retail gets so just annihilated, unfortunately, you know, that's when you get the bottoms, right? When their liquidity just kind of evaporates. So what I think is happening with Tesla is, man, I don't know. We're going to talk about it. I think this is not good for the stock. Not good for retail right now. I think what Elon said today was honestly not good either. And we'll talk some more about that. And then, of course, Qubit is up. Let's see, what it was up like 7% when I was looking at it earlier, but it's probably okay. It's actually down 1.35%, and really, this is just insane in and of itself. That it even rallied on that on those earnings, because it quite clearly demonstrated that this is not that company, right? And I think people just have a little bit of a confirmation bias in it, unfortunately. SPY, we're off today, 0.63% at 561.89. Okay, you have the composite, and we're shaping up to have some, you know, basically similar volume, okay? And a lot of this is going to be the consolidation pattern, I think, from the 560 up till, what, like about 570. Composite off about 0.15% at 17,665. Dow Jones Industrial off 0.24% at 41,850. And the Russell futures off about 0.69% at 2,071. You get the dollar ticking a little bit higher, up 2.8% at 104.06. Crude oil, okay, crude oil's, this is the contract at least, up 0.43%. But it's trading at its lower range that it's, you know, been trading at really since 2021, right? So much lower does it have to go? It seems like for sure Brazil is going to get, you know, this oil output online. Saudi Arabia too. You just had the AOK for extra drilling out in Alaska. This is what I want to look. U.S. oil and gas rigs rise for the first time in 3 weeks. Added oil and natural gas rigs for the first time in 3 weeks is from the energy firms. Wow. Oil and gas rig count, an early indicator of future output, rose by 1 to 593. You know, this is going to continue to increase. On the gas side, the EI projected 91% increase. This would prompt producers to boost drilling activities. So, I mean, you know, what's hard to say with it, and I'm not really a commodities guy at all, but it seems like it's interesting. You might be able to go a little bit lower if you have such an oversupply, which is what people are kind of anticipating. But you take a look at the chart on the long term, and this is really like the low it trades in. You know, I mean, obviously, you know, you ignore COVID because that was insane. But, you know, you get some recovery a year afterwards, and we're just right at those levels. Okay, so I really do want to get Teddy Keksat on to talk about this a little bit more. Does he see that this is really the true stable price, that this price is locked in for that kind of you know, environment? Of course, if you want to get some early access to that, you can just go to TFNN, go to the newsletters tab, and you know, we have the Tiger Forex report. He releases that once a week on Monday, so you can kind of get in there. But I really do want to have him on as well. And he was joined by Tommy on Wednesday morning. You check out that on our YouTube channel, that archive. Taking a look at the gold contract, off about 0.58% today at 3,026, still very strong commodity. Copper off a little bit as well, and silver continuing to kind of underperform, at least if you're considering the massive movements you saw in copper and gold yesterday. But silver is also off as well, about 1.55%. The 10-year. Okay, so you have the, again, rates coming up a little bit, right? What is it actually? I think we're at 4.23% yesterday. I'm gonna have to close that window there too. If you guys can hear that AC unit, I apologize. Trading it, okay. I mean, nearly unchanged in a way. We're 4.24 right now for the 10-year Treasury, but it not coming, down substantially. It ticking up a little bit. I think, I mean, this movement down is nice. Coming up from 4.3, we're really trading at 4.2. I think does demonstrate that, at least the bond traders do see rates coming down and staying there in a meaningful way. One of the things I get worried about is because, you have something like $6 trillion or whatever in U.S. debt needing to kind of get refinanced in June, you need these rates kind of lower. And so what I fear happens is that you get rapid rate cuts up into there, right? And I really probably don't think that Powell would do this. I think this is a little bit harebrained what I'm saying. But I thought the rate cuts in like November or October, where he cut by 50 basis points was insane. So I mean, I could see some kind of rapid rate cut in order to get cheaper pricing, but inflation is still high, right? And growth is still contracting, or at least projected to contract. I'm not saying we're going into a recession or anything. I just think the problem is when you get that growth coming down, but prices accelerating, you run into a problem. And I don't think you can really lower interest rates in a meaningful way when it's like that. Now, might all get proven wrong, and maybe you can do that, but that just kind of goes against the traditional wisdom, right? But what's going on now is really anything but traditional, I would say. You have Apple trading up 0.43%. They've had some major missteps with that iPhone 16. We'll see if they can get Siri working. One thing I do think is interesting is their foldable phone that should be coming out in 2 years. I think that'll be nice, but that doesn't really mean a buy now for Apple. Folks, you stay right there. We'll be right back. We'll talk a little bit. Man, we got to talk about Tesla, Qubit, Oro, all these kind of things. Stay right there.